So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to the Daily Call. Today we're going to answer the question, does implied volatility matter for option spreads? So again, this is a user member submitted question. If you have a question you want to get answered on the podcast here on the Daily Call, please let me know. Shoot me an email, send me a tweet, go over to optionalpha.com/ask, do whatever you need to do to get that question in. So the question that somebody asks is, if you were only doing calls or puts and not spreads, it looks like implied volatility is a good idea and you should base trades off of that. But in a spread, since we're buying and selling an option, one cancels the other out. And what I meant is that if implied volatility or IV rank is high and options are expensive, well, you're buying an expensive option and you're selling an expensive option. So why does it matter? And this is a great question. I think a question that most of the time comes up when people really start to feel the gears in their mind start to move and click, and they're starting to understand the whole process around options trading as a business, and particularly options selling as a business for income. So I would say that when you have very tight spreads, say $1 or $2 wide, then yes, implied volatility probably matters much less because it cancels out from one to the other. But it's still important in the overall scheme of selling high implied volatility setups, because generally what we see is that when we have high implied volatility setups, we see that you are able to then sell options further from the market. So even though it's a very tight spread, you can still potentially sell it further away from where the stock is. And those stocks tend to underperform that high expectation. So while the implied volatility may not matter as much for the individual strike prices, if you're doing a very tight spread, again, a $1 or $2 wide spread, what you don't see in this high implied volatility environment, or maybe what you're missing in this high implied volatility environment, is the ability to sell that tight spread, say $10 away from where the stock is, as opposed to $5 away from where the stock is. So that to me is really where the difference is. Now, again, this difference is then magnified if you are selling really wide spreads. So if you're doing something where you're doing an iron butterfly or an iron condor, and your wings or your spreads on either side are say $5 or $10 or $15 wide, then yeah, implied volatility has a much greater impact because you're selling an option closer and buying one much further out. So the difference between those two contracts is going to be much greater when it comes to its impact from vega or volatility. So hopefully this helps out. Again, it's not that it doesn't matter, because it does. Implied volatility does matter with regard to how far you can sell of those options and how the underlying is going to perform compared to the expectation. But again, if you have a really tight spread, then it's going to be canceling each other out. You just have the ability then to sell options further from the money. So hopefully this helps out. Great question. As always, if you guys have any other questions, let me know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from optionalpha.com.